7 tips to invest during the recession. If you're an investor, you already know that the stock market is a roller coaster. But what happens when the whole economy goes into the tank? We know that the economy's been pretty rough lately, and that this is when everyone feels anxious about their money, and we get it. Investing can feel like a gamble sometimes, but there are ways to ensure you don't lose your shirt or pants. And that's what we'll talk about today: how to invest during a recession. We know this isn't always the best investment time, but you can make a lot of money in the future by investing in a recession. So in this video, we'll share 7 tips for investing during a recession that will help you keep your head above water and be ready for when the economy recovers, or even better, before it does. But before that, don't forget to subscribe to the channel and like the video. Number 1. Cash is king during a recession. If you're worried about the economy, cash is your best bet to invest during a recession. As always, it's important to remember that there are no guarantees with the stock market or any other financial investments. But cash is an excellent way to hedge against inflation and other risks associated with investing during a recession. While keeping all of your money in cash may be tempting, it's important to strike a balance so you don't miss out on potential gains in other asset classes, such as stocks and real estate. A good rule of thumb is to have at least 3 to 6 months of living expenses in cash to know you can weather any short-term storms. Many investors invest in short-term bonds or money market funds to ensure liquidity. Number 2. Own defensive stocks in a recession. Defensive stocks are companies that provide essential goods or services that people continue to buy even during tough economic times. Consumer staples, healthcare, and utility stocks are defensive stocks that tend to hold up relatively well during a recession. That's because people still need to buy food, medicine, and electricity even when times are tough. These stocks can help provide stability and even modest gains during an economic downturn. Number 3. Use dollar cost averaging. The term dollar cost averaging refers to an investment technique in which you invest the same dollar amount into an asset at predetermined intervals over time, irrespective of the asset's price. Using dollar cost averaging can help decrease market volatility's impact on your investment portfolio. This strategy entails making larger purchases of shares of stock when prices are lower and smaller purchases when prices are higher. To start with dollar cost averaging, you need to choose an investment account like an IRA or a 401k plan. Your broker can help you set up this type of account online if you don't have one. Choose a stock that you want to invest in. You can choose any company, but it's best to choose one with an established track record of growth so that you can benefit from its future success. Set up a systematic investment plan with your broker so they automatically withdraw money from your bank account each month. Number 4. Buy quality assets during a recession. Quality assets are likely to maintain or increase in value over time, regardless of economic conditions. These assets might include art, antiques, collectibles, or precious metals like gold and silver. If you have the cash available, buying quality assets during a recession can be a great way to diversify your portfolio and potentially profit from future price appreciation. However, it's important to do your homework before making any investments, so you don't get taken advantage of in the heat of the moment. You should invest in companies with a strong balance sheet in a recession. If the company can pay its bills and has enough money to make it through, it won't go bankrupt if the economy worsens. Investing in companies with good track records and brands also works well during recessions because these types of businesses tend not only to do well financially, but also have loyal customers who continue buying their products or services even when it's hard for most people who aren't rich yet. Number 5. Avoid growth stocks during a recession. Growth stocks are companies expected to experience above-average earnings growth in the future. These stocks tend to be more volatile than defensive stocks and, therefore, more prone to losses during an economic downturn. For example, food and beverage businesses typically stock shelves during recessions because people still need to eat. In addition, these types of businesses have slower growth rates than other sectors, but also have low volatility. For example, PepsiCo is a good defensive stock because its products are sold in both developed economies that are more likely to suffer from recessions, like the United States and Western Europe, as well as emerging economies like Africa and Latin America, which tend to grow faster than developed markets during a recession. This gives the company stability and growth potential when things start picking up again on Wall Street. Similarly, utility companies also do well during recessions. For example, Exelon Corp, EXC on the New York Stock Exchange, is a good defensive stock because it provides electricity in the United States and Europe. As such, it should perform well during a recession because people will still need to turn on the lights and keep their homes warm, even if they don't have much money for other things. So if you own growth stocks in your portfolio, it may be worth selling them before the next recession hits to avoid potential losses. Reinvesting the proceeds into defensive stocks or quality assets is typically a good idea. Number 6. Invest in dividend stocks. Dividend stocks pay regular cash dividends to shareholders from profits generated by the company. Another great way to make money during recessions is by buying stocks with dividends, the amount paid out by a company each year. Dividends are safe because they provide regular income from your investments without worrying about volatility or fluctuation in price, as long as the company continues paying its dividend each quarter. Then you'll continue receiving payments without fail. Many dividend-paying companies are large, well-established businesses with solid balance sheets that can weather an economic storm. If you invest in dividend stocks, you will receive income from your investments during a recession and may also benefit from share price appreciation if the companies perform well. It's also worth noting that many companies tend not only to offer cash, but also stock appreciation rights instead, so watch out for those too if possible, since these can boost up your overall income potential too. Number 7. Don't overreact during a recession. It's important not to overreact when the economy turns for the worse. A recession will not last forever, nor will it be more severe than any other economic downturn in history. So don't panic and sell all your stocks because of one bad quarter or 2 weeks of lackluster economic data. The stock market has already dropped significantly by 20% on average since the start of 2022, but will likely see even bigger drops over the next few years, as many investors try and get out before the next recession starts. Don't buy more stocks if you think this might happen. Wait for them to increase again before putting more money into your 401k. Many investors make hasty decisions out of fear or greed that cost them dearly. If you have a well-diversified portfolio with quality assets, stick to your long-term investment plan and resist selling everything because there's bad news on TV. Remember, recessions don't last forever, and eventually, the economy will rebound. Following these tips can help ensure that your investment portfolio comes out unscathed, or even better off after the next recession hits. So keep them all in mind if you want your money to be on the safer side. We think it's time to say goodbye, but before leaving, make sure to subscribe to the channel and like the video to throw your support and love our way. Hit the bell icon so you never miss any of the latest updates from our channel. Comment down your feedback and thoughts about these tips. We will look forward to your comments and will try to reply to them all. Check out our channel for more such interesting videos. See you in the next video. Till then, take good care of yourself. Goodbye.